Hello, my name's Faith, and today we're talking about what happens to your pension when you die. Did you know your pension isn't legally considered to be part of your estate, which is everything you own when you die, including your money and assets such as property. So, when you pass away, your spouse, civil partner or beneficiaries may be able to receive your pension tax-free. But there are a few rules for passing on different types of pensions. Let's start with private pensions. Private pensions include workplace pensions and pensions you've set up yourself. For example, a self-invested personal pension or a self-employed pension. The two main types of private pensions are defined contribution pensions and defined benefit pensions. Let's start with defined contribution pensions, which are the most common. It all depends whether you die before or after your 75th birthday. If you die before reaching 75, any money left inside your pension pot can usually be passed to your beneficiaries tax-free. In this scenario, private pension payments after death can be taken as a lump sum, invested in a drawdown pension, or used to purchase an annuity. It's important to note that your beneficiaries will only have 2 years to claim your pension tax-free when you pass away. After this point, they may have to pay income tax. If you've withdrawn a lump sum, any cash you've taken out of your pension and haven't spent will be counted as part of your estate. This means your beneficiaries may have to pay inheritance tax on the money. If you've already started receiving income for an annuity, this usually can't be passed to a beneficiary. But there are some exceptions. If you've got a joint life annuity, a value protected annuity, or a guaranteed term annuity, your beneficiaries will usually be able to receive your future payments tax-free. However, some conditions may apply. Your beneficiaries should contact your annuity provider for further information. If, on the other hand, you die after your 75th birthday, your beneficiaries will need to pay income tax on any pensions you leave behind. They'll be charged at their marginal rate of income tax. So accessing a large lump sum could push them into a higher tax bracket. Make sure your pension provider knows who your nominated beneficiaries are, such as your partner, children, or a favourite charity. If you're a PensionBee customer, you can do this in just a few clicks in your Beehive, your online dashboard. Defined benefit pensions work a little differently. Their value is linked to your salary and how many years you've worked for your employer. If you die before you retire, your pension may pay out a lump sum worth 2 to 4 times your salary. If you're younger than 75 when you die, this payment will be tax-free for your beneficiaries. If you've already retired when you die, your pension will usually continue paying a reduced amount to your spouse, civil partner, or other dependent. Do make sure you've named your beneficiaries, although the pension scheme rules will have the final say. Usually, your state pension payments stop when you die. But sometimes, your spouse or civil partner might be able to inherit part of your state pension as a top-up to their own state pension. The key date to remember is the 6th of April 2016. Your spouse or civil partner might be able to inherit part of your additional state pension if your marriage or civil partnership with them began before the 6th of April 2016 and you reached state pension age before the 6th of April 2016. Your spouse or civil partner might be able to inherit part of your protected payment if your marriage or civil partnership with them began before the 6th of April 2016 and you reached state pension age on or after the 6th of April 2016. If you delay taking your state pension, your spouse or civil partner might be able to inherit part of this deferred pension if you reach state pension age before 6th of April 2016, you're married or in a civil partnership with them when you die, and you die before you start claiming your state pension. The rules on inheriting a state pension are complex. Check gov.uk to find out what you can claim.